Hello and welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and we are here for yet another daily talk of stock. And it is Saturday, May 17th. So it is the weekend. So go out there, have some fun, spend it with friends and family. Try to just relax from the markets. But I know that may be hard for some investors to do because on Friday, right after market close, we got this bad news from Moody, and that was that they were going to be cutting America's credit rating, and they cite it is because of the rising debt. And so when we look at the bond ratings from the big three, the big rating agencies, Moody's, Standard and Poor's, and Fitch, recently the United States, for the first time ever, was downgraded from Moody's. And so they went from being at AAA to AA1. And so this is the first time Moody's has ever downgraded the United States, but this isn't actually the first time that the United States have been downgraded by one of the three major rating agencies. And so they were actually last downgraded in 2023 by Fitch, and then also by Standard and Poor's in 2011. So this isn't anything new, but they still do have a great credit rating. It's basically like, in simple terms, they went from, for us, it would be like having an 850 down to a high 700. But regardless, still some bad news. And again, it sent the markets into a panic on Friday's close. And so the major indexes lost a lot of value. A lot of individual stocks saw a big drop off, and also cryptocurrencies as well. And so the markets are reacting to this with some panic. And as I have been saying on this channel, we do look a little bit overbought right now. So on a lot of stocks, we look overbought, and then also on the major indexes as well. So we could see on the SPY and then also on the triple Qs, when we look at the indicators of the RSI and then also the MACD, we could see that we are looking overbought there. And then also with these major indexes, like a lot of stocks as well, we have seen some crazy swift recoveries. And so in general, the markets have been reacting with a lot of knee-jerk reactions to all the news. So it had a lot of knee-jerk selling off to begin the year, and then news started to get better as of most recently, and that's where we have seen the big recovery that we have seen. But I wouldn't be surprised if in the markets the panic does continue into Monday and we see a bit more of a sell-off. So I could see a bit of the sell-off in the major indexes, a sell-off that could continue on for possibly the whole week, depending on if there is new bad news out there. So the news has been great, but this could be the first catalyst for worse news. If something else comes out, we could see a continued sell-off, but that is just my short-term analysis. Overall, I do believe that we are still recovering. And so if you're investing into these markets over the long term, this short-term volatility shouldn't be too much for you to stomach, because if you have bought into any of these spots and you truly have a long-term conviction, this is just a small moment in time. And just like the other periods when the United States was dropped in rating, well, we could see that the markets are perpetual and they have only shot up from those moments. So they look very small in the big course of time. But if you are trading the markets, trying to make profits as you go, this is just something to be aware of, because we could see a bit of a sell-off in many different plays, including the major indexes, cryptocurrency, basically everything in the market. But myself, I'm not too concerned, because I have been having a lot of fun with the markets recently, making a good amount of profits. And if there is a pullback, I'm only going to add on the pullback. But not Standard & Poor's, Moody's recently dropping the United States was, from what they cite, being the United States national debt. And so we're on the U.S. debt clock here, and we could see that there is a massive amount of debt that the United States has. This is no surprise to anybody. This is no secret. We all know that the United States is under trillions of dollars of debt, 36 trillion to be exact. And so what's interesting about Moody's right now doing this, it comes at an interesting time, because in Washington, D.C., they are talking about the big, beautiful bill, which has a lot of proposed tax cuts. And so with these tax cuts, they will help more working citizens. You know, one of the most famous things on that bill is the no tax on tips. But what Moody's is saying is that by not having that funding from those taxes, that overall this is going to hurt the United States economy, and it is only going to increase the debt over time. But I think this is a funny thing to talk about, because it reminds me a lot of talking about the rising of the U.S. debt ceiling. So for many years we have seen they talk about, we need to rise the U.S. national debt ceiling. We need to rise it or else we're going to default. The U.S. is about to default. That little bit of panic and fear, uncertainty, and doubt comes into the markets every here and there, right? But every time the debt ceiling does get risen. And so, not to be political or anything like this, but we could see that with each president, the debt has risen. So whether you're a Democrat or a Republican, the U.S. national debt always rises, and the U.S. national debt is at a level of unsustainability overall. And so this has been a long problem. It's been talked about forever, how the United States just continues to kick the can down the road. But just like kicking the can down the road and how they just continue to kick the can down the road, I believe that the can will continue to be kicked down the road, and that we will only continue to see the markets go up over time. But in the short term, this could hurt us, and overall, this could potentially hurt the United States dollar as well. So we know with the United States dollar, the government, the United States holds a lot of power over the world with the dollar. Of course, trading is done with a lot of the dollar. The dollar is the most powerful currency, and the United States at times has used the dollar to bully other countries. So not to be too political, whether you're on the side of Russia or Ukraine, we're just going to talk about this in terms of the market. But this is an example of how the United States has used the dollar before to bully other countries. And that was when Biden announced the new sanctions on Russia in February 24th of 2022. And so there was a lot of sanctions put on Russia. This did have a lot of effect on the Russian economy in the short term. We know it did collapse their currency, which did return back pretty quick. So they had a swift recovery in their currency. But essentially, Biden and the United States cut Russia off of a lot of the dollars. So just imagine if somebody freezed one of your bank accounts. That's basically what the United States did there. And so with Moody's cutting down the rating on the United States, that just makes the United States look a little less credible and could hurt when it comes to borrowing money, which is what the United States is all about, borrowing and lending. We know that the debt, again, when we return to debt over time, is always rising. So the United States is always borrowing. So this is a big part of the United States economy, and what many will say is broken, because again, we are on what appears to be an unsustainable path. And so we are concerned that the United States will not continue to be the superpower that it has been. And Trump recently has, on Truth Social, again called out to Jerome Powell, the Federal Reserve. He said that the consensus of almost everyone is that the Fed should cut rates sooner rather than later. Too late, Powell, a man legendary for being too late, will probably blow it again, but who knows? And so Trump putting the pressure on Jerome Powell to cut rates. In general, we know that the markets this year have reacted pretty bad to the news that came from last year, and what I consider to be a big reason for the drawdown, and that is the interest rates. So there's the three major factors that we talk about that caused the big bleed into April, and that was interest, inflation, and then also the tariffs. And so a lot of fear, uncertainty, and doubt around these three different factors. And with the interest rates, the Federal Reserve is constantly pushing back the date when they will cut. So overall, making it hard, especially because the United States, again, is always borrowing on bonds. And so with the Fed not cutting right now, and then also with Moody's, it does look like there's a lot of factors going against Trump. But overall, as we have been saying on this channel, we believe in the long-term plan. And just like we've talked about with the tariffs, they weren't as bad as many investors were expecting. So with each set of tariffs, they did get rolled back. And overall, if we do see a short-term pullback, I am not too concerned, as I believe that we are still on the continued market rally, and just any little bit of a pullback will bring us back down lower on the RSI and the MACD, signaling that there are better opportunities for us investors. And so what I'm personally going to do, and what I have been doing on this channel, channel. If you are subscribed, you know this. If you're not, check out my other videos. I invest in a lot of small market cap stocks, and recently volatility in the markets have been crazy. And so I have been playing with the options contracts on these small market cap stocks, and these stocks will shoot up 20, 30, 50% in just a day. And the options contracts with those can shoot up in even greater percentages, 100, 500% plus. And so there are a lot of opportunities in this market. But what I encourage for investors is just to never put yourself in a position where you feel super worried about something like the news that we got with Moody's on Friday, because again, it is not the end of the world, but this could cause the markets to sell off a bit. And who this will hurt the most is those who are over leveraged in the markets and have bought in too many shares or options contracts and topple themselves on a red day. The markets have been super green recently, but we have been saying that there will be a little bit of a red day. I'm a long-term bull on the markets, but I'm also going to be aware of what's happening in the short term to take advantage of these opportunities. And so if you are over leveraged and you are worried about this situation, I'm sorry that has happened to you, but think about it in that long-term sense. The markets are perpetual and they go on forever. So this is just one bit of bad news that may cause a bit of a drawdown. Maybe we'll get some more bad news this week and maybe it will cause more of a drawdown, or we could get great news and all of a sudden we could rise back up. But myself personally, when bad news does come into the markets or we do see a bit of a sell-off, I am even more excited because that means I could just add 2 more of these great plays and opportunities while they are cheaper. And so like I have been saying, I have been playing with the options contracts, which moves at just so greater of volatility. So they rise like crazy, and during moments when the markets have been bleeding is when I have been adding to my opportunities. And so I would just be curious to hear what everyone else's opinion is on this truth bomb that just came recently with Moody's. If you think that this is going to continue to collapse the markets, if this is going to change everything, collapse the dollar, because the dollar is not going to look as strong with the credit rating agencies and the United States losing power potentially, or if you think that this is just a big nothing burger. I personally believe that this is a nothing burger, and I am invested in the long term, and I do believe in Trump's plans. So myself, I am staying bullish. But yeah, please drop a comment. Let me know what you think. Please leave a like, and please subscribe to the channel if you guys haven't already done so. I thank you all so much for coming today. Enjoy your weekend. I'll see you in the next video.